Hello, I'm Lance Zimmerman with the CattleFax Closing Bell, brought to you by Pfizer Animal Health. Cattle producers received a winter hay supply update in the most recent monthly USDA crop production report. The report provides production numbers during the current hay marketing year and also a record of current on-farm stocks. Before digging into the most recent numbers, it's important to know that carryover hay stocks were relatively normal coming out of winter 2012. May 1st on-farm stocks were at 21.4 million tons, only 3% lower than the 10-year average. However, spring and summer hay production was exceptionally weak, even compared to a relatively light 2011 harvest. Hay production as of December 1st was at 119.9 million tons, down 9% from a year ago and down 19% from the 10-year average. Drier growing conditions across the United States are clearly the reason for disappointing production. However, the lack of precipitation also led to pasture conditions being some of the worst in recent history. That led to more hay consumption through the summer than typical. 46% of the available hay supplies from May through November were consumed during the growing season, compared to a 10-year average of 39%. Hay imports during that time were also some of the highest on record at 191,000 tons. These figures put December 1st on-farm hay stocks at 76.5 million tons. It's the lowest hay stocks number since 1955, and it represents the smallest increase in hay stocks during a growing period since 1953, 34% smaller than the typical annual increase. This will be supportive to additional hay price increases through the winter. The USDA hay price, excluding alfalfa, increases 5 to 10% between now and late winter. With current prices around $142 per ton on a U.S. average, expect late winter hay prices between $150 and $155 per ton by late winter. Fed cattle prices dropped $1 to $2 per hundredweight this week on light to moderate trade volume. Most live cattle trade occurred at $124 to $125 per hundredweight. Dress sales were $5 to $6 lower, reaching $196 to $199 per hundredweight. Feeder cattle prices were $3 to $7 lower, while calves were quoted $2 to $5 per hundredweight softer. Heavier cattle continued to receive larger discounts as continuing losses in the feeding sector weakened demand. Slaughter cows were $2 to $3 lower this week as well, and boxed beef values were softer for choice but firmer on select product. Corn traded in a mostly sideways pattern following the price rally after the USDA crop production and grain stock reports last Friday. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.CattleFax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.